With the S&P 500 not knowing if it wants to go up or down, and the FTSE 100 not trailing too far behind that in terms of volatility, how has that affected my Trading 212 portfolio? So in this video, I'm going to go through my Trading 212 Invest account and my Trading 212 ISA account. So this is my Trading 212 Invest account, and as you can see, the current portfolio balance is £7,706.30. If I go to the drop down menu, I only have £1.72 in free funds, meaning that most of my cash is actually in a stock or ETF. So overall in the past month, you can see that I did deposit around £1,500, and the return has been going up and down quite a bit. Currently the return overall is only a measly 0.12%, so that is a gain of around £9.05. So I'm going to go through all my holdings no matter how small they are and just see how they've been doing over the past month. So Walt Disney, I have 0.12 shares, and that is down by 16% in my portfolio, so that is a loss of £1.74. As you can see, over the past month they have actually declined by a small 0.43%. They had a nice big peak on the 10th of August, and then I'm not sure what happened after that. As we can see from the income statements, the revenue is increasing year to year. However, if you look into the cash flow, it might tell a different story. I am by no means a financial expert, so these at a glance statistics shouldn't be taken for all or nothing. Sometimes you can see from an income statement or a balance sheet if the company is doing really badly. However, not all the time can you actually deduce such things from just looking at these statistics. So next, Vodafone, and I have 35 shares in that. Over the past month, Vodafone has been doing quite a bit of a yo-yo, but I'm not too surprised because they did pay a dividend this month, and therefore their share price would have gone down with respect to the amount of dividend paid. So in my portfolio, they're down by 20%, so that is a negative £6.48 loss. As you can see, they did pay a very nice dividend of £1.36, so their dividend yield is actually very high. I own only 35 shares worth around £25, and I received a £1 something dividend, which is really good. So currently their dividend yield is 10.76%, which is really high. You can see from the income statements, the revenue has kind of stayed the same, and the balance sheets look like they need a bit of work on them. Again, like I said, just from the income statements and balance sheets, you can't tell everything because sometimes companies can manipulate these balance sheets. Next, I have only 0.8 shares in the Vanguard FTSE All Cap, and I don't know really why I'm holding on to such a small amount, but anyway, that is down by 5.4%. So that is a loss of £1.06. Next, I have the most shares in the Vanguard FTSE 250, and as you can see, they have been incredibly volatile over the past month. If you've been keeping up with my FTSE 250 series, you would see that I have been buying a lot into the FTSE 250 with my Trading 212 and free trade account, and I have thousands of shares in that. So in this general account, I have 225 shares, and that is down by 0.64%, and that is a loss of £42.17. You can see from the overall graph, you can see that the FTSE 250 is a whole lot more down than it was 2 years ago. So I do think there is a bit of a climb left for the FTSE 250, although the volatility is going to prove to be very vicious. Currently, they're paying a dividend yield of around 3 or 4%. It doesn't really say here, but the dividend yield is not too bad from them either. Next, I have Tesla, and I only have 0.04 shares in that, so again, very insignificant. However, I do like to keep these shares that are free so that I can update you guys if you would have bought it, because the percentage amounts are going to be roughly the same anyway. So in my portfolio, it is up by 89%, so that's really high, with a £4.45 gain. Over the past month, as you can see, Tesla has not been doing too great. They currently don't pay a dividend yield, and as you can see from their income statement, they're doing very well, and balance sheet also doing very well. Starbucks is down by 3.26%, and I only have 0.2 shares in that, so that is down by 56 pence. Starbucks, as it stands, has a dividend yield of 2.12%, and as you can see from their income statements and balance sheets, they do tend to have a lot more liabilities than assets, but I think overall Starbucks is going to be pretty fine. Next, I have Rolls-Royce, so I have nearly 30 shares in Rolls-Royce. Over the past month, Rolls-Royce actually has been doing incredibly well, and they are up by 42%. That's actually quite surprising because I haven't really looked into them. They are up in my portfolio by 61%, so that's a £23.57 gain. Again, no dividend yield, and their financials are very difficult to actually look into because their revenue has increased but their net income decreased. And as you can see from their balance sheets, they are taking a lot of liabilities on, possibly debt or whatever they are doing to expand their current production. Next, Next I have PayPal. So with PayPal I have 1.6 shares worth around £78.51. That is down in my portfolio by 1.95%, so that is a loss of £1.56. Currently PayPal do not pay a dividend yield, and as you can see from the income statement, their revenue has increased and their assets have increased in line too, I guess. Over the past month they haven't been doing too well and they've lost around 12% overall in this month. This was directly after the 2nd of August, and I'm assuming it was roughly around the time where the USA was downgraded in one of their credit scores from one of these institutions, and that had a knock-on effect on these companies that actually deal with money in the USA. So next I have Orange, and over the past month you can see they're on a decline by around 2%. In my portfolio they are down by 9%, so that's a £2 loss. I only have 2.3 shares, so that's not a huge lot to be down by. They do pay a tasty dividend of 6.82%, again that no pun intended because they're on Orange. You can see from the income statement looks quite similar from all the way back in 2020. The balance sheet also looks similar, so I'm not too sure about the future of this company. So next I have Nvidia. I have only 0.09 shares, and in my portfolio they are up by a massive 174%. So that is an £18.47 gain. Over the past month, however, they are down by 3%, and we saw that at one point they were up by around 4%. They do pay a very minute, almost insignificant dividend yield of 0.04%, and as you can see from the revenue, Nvidia is going to be a company that's going to be fine in terms of cash because they're making heaps and heaps of that stuff. Balance sheet again going to be fine, and cash flow, it is what it is. So next I have Nike, and I have 0.25 shares in Nike worth £21.72. You can see over the past month this company has very much yo-yoed a lot, so the volatility is quite a bit. They do pay a dividend of 1.25%, and as you can see from the income statement, again they have a huge amount of revenue and income, and the balance sheets look really good as well. So next I have National Grid. Again, over the past month they have done quite a bit of up and down. Overall they are down by 0.48% in the past month. In my portfolio overall they are down by 2.22%, and that is a loss of 11 pence. Again, not anything to cry about. They do pay a nice dividend yield currently of 5.6%, so that's nice to hold on to, and as you can see from their income statement, their revenue has kind of gone up exponentially since 2021, and the balance sheets are looking pretty good too. So next I have Mercedes-Benz, and I have 0.18 shares in that worth £10.87. Over the past month they are down by 4.22%, and they had a peak of plus 0.34%. Overall in my portfolio they are down by 3.55%, so that's a 40 pence loss. They do pay a big dividend yield of 7.48%, and as you can see from the income statement, they are increasing their revenue nicely, and the balance sheet also looks pretty good. So next I have Lloyds Banking Group, and over the past month again a lot of going up and down. Overall they are down by 0.36% this month, and in my portfolio they are down by 16%, and that is a loss of £10.15. They do pay a nice dividend yield however of 5.87%, and I would actually not look too much into their income statements or balance sheets as they are a banking group, and it's much more difficult to look into how they are performing just from the numbers. Next I have Royal Mail, and that is up over the past month by a nice 13%. So I have 6.2 shares in that, and overall in my portfolio surprisingly they are up by £23.74. So they're not doing too shabby anyway, and they've given me a return of £3.15. So overall they do pay a really good dividend yield of 6.36%. But again, don't buy into a company just because their dividend yield is high, because that's all related to the stock price anyway. Income statements also look pretty good, and their balance sheets are not looking too bad either. Next I have IAG, and over the past month it has gone up by 3%, and aviation is really starting to take off again, no pun intended. I've actually got a flight in a week. Anyway, in my portfolio it is down by only 1%, and that is a loss of 11 pence. Again, I do think that this company is going to recover very quick very soon, given the fact that Heathrow has become as busy as it was before the pandemic, and people are just taking loads and loads of flights, especially because the weather in Europe has been incredibly good. That has driven up the amount of sales of flights within Europe. So overall in my portfolio they're down by 1.04%, so that's 11 pence loss. They don't pay a dividend yield, and their income statements are looking a lot better than they used to be. So as you can see, 2020 and 2021 were not great years, because of course we all know what happened to flights during that time. So next I have H&M, and they've been doing quite badly over the past month. However, overall in my portfolio, they are still up by a big 37%. So that's a £3.61 gain. They do pay a decent dividend of 3.84%. And as you can see from the income statement, they're not doing too bad either. And the balance sheet looks fine too. So next I have GSK, and I have 0.2 shares in that. And over the past month, they are up by 4.42%. In my portfolio overall, they are up by 3.27%, giving me a measly but nice 13 pence gain. They do pay a substantial dividend of 5.23%, so that's really good. And as you can see from the revenue, they have been increasing very nice, and their balance sheets also look like they're taking on less liabilities but also holding less assets. So next, Direct Line Insurance, and over the past month, surprisingly, they are up by 12%. In my portfolio overall, however, they are down by 22%, so that's an 88 pence loss. They do pay a nice dividend yield currently of 5%. However, if you look at the income statement, they've been making quite a bit of losses, and I think a lot of shareholders have been buying out of them anyway. And from their balance sheets, you can see the total amount of assets they have has also decreased, so that could be something to do with trying to pay off some of the debt. So next I have Deutsche Lufthansa, and they are down 3% in this month. Overall in my portfolio, they are down by only 4%. That's a loss of £2.53. Again, aviation is going to start to slowly take off again, and all these companies I do feel like are going to be going back to double figures again. They don't pay a dividend yield, and as you can see from the income statement, the amount of revenue they've been making is exponential since the decline in 2020. You can see from the balance sheet again, lots of liability and lots of assets, but that I would say is part and parcel of actually running aviation companies, where you're actually sitting on a lot of loss if you don't sell the tickets. You're gonna have to spend a lot on actually maintaining the aircrafts, parking the aircrafts, making sure their aircrafts actually move when they're not used, and of course the amount of fuel that you have to have in reserves. So next I have Delivery Hero, and I have 0.6 shares in that. Over the past month, they are down by 4.54%. So overall in my portfolio, they are down by around 3%, so that's a 68 pence loss. So they don't currently pay a dividend yield. However, you can see from the income statement, they have been doing really well, with revenue going up, however net income going down. With their balance sheets again, it looks fine. So this company could potentially be a company that does return closer to what it used to be. But then again, I'm not going to be investing in companies that I don't know too much about. Next, I have exactly one share in Carnival, and that is worth £12 now. Over the past month, it is down by 8%, but overall in my portfolio, that is up by a massive 71%, so that's a £5.01 gain. They do, however, pay a dividend yield of 3.15%, and as you can see from the income statements, the past year has been a lot better than the previous 2 years, and the balance sheets seem to be taking on more liabilities than they could potentially afford. Next, I have 18.42 shares in BP, and overall in the past month, they are up by 5%. However, overall in my entire portfolio, they're down by 9%, so that's an £8.99 loss. They do pay a decent dividend yield of 4.35%, and as you can see from the income statement, and as we all know, these companies have been profiteering off people's losses for a long period of time now since the pandemic, and of course they'll be fine in terms of cash and balance sheets. I believe the windfall tax on these companies is coming to an end soon, so actually these companies didn't suffer at all during the time period when we all suffered. So, you know, that's something to take into consideration. As a shareholder, that could be potentially quite good. But as someone who actually cares about other people, these companies, I do feel like are profiting way too much at a time when people are losing their homes and their livelihoods. So next I have BMW. I have 0.12 shares in that. Over the past month, they are down by 6%, and they had a high of plus 0.1%. In my portfolio, still they're up by 0.09%, so that's a 1 pence gain. So I'll try not to spend all of that in one place. As you can see from the lending info, this is one of the shares that have been part of Trading 212's share lending feature, which I'm going to talk about in a bit. And I've lent a value of £10.77, and that is at an annual equivalent interest rate of 0.04%. They do pay a big dividend yield of 8.5%, and as you can see from the income statement, they have been doing a lot better recently. The last dividend I was paid was 67 pence back on the 17th of May. Next I have Aston Martin, and over the past month it is up by 1.33%. And as you can see overall in my portfolio, it is up by a massive 133%. So that is a £2.65 increase. Again, another company that I am lending shares inadvertently, but that has a much higher interest rate at 1.52%. They don't pay a dividend yield. However, from the income statement, you can see that, you know, the revenue has gone up, but the net income doesn't seem to be increasing a lot. Balance sheet, again, I'm not too sure about this company. I bought this company for a lot higher in value in my free trade portfolio, and I'm down around 80 to 90%. So again, I don't think Aston Martin in the long term is ever going to go back to what it used to be. So next I have ASML, and I have 0.02 shares in that. So over the past month they are down by 4.54%, and as you can see from my portfolio, they are down overall by 9.23%. So that is a £1.12 loss. Currently they do pay a dividend of 0.94%, and from the income statement you can see that the revenue has been increasing quite nicely over the past 3 years. Also from the balance sheet you can see they're doing quite well as well. So next I have Apple, and as you can see I have 0.3 shares in that, and over the past month they have a huge decline on the 2nd of August, possibly due to that credit rating thing that I talked about before, possibly due to the fact that the US credit rating had suddenly gone down. In my portfolio however, they are still up by 11.58%, so that's a £4.63 gain, and they are paying a dividend currently of 0.54%, which is again not a lot to be paid. However, from the income statement you can see that the revenue is increasing quite a bit over the past few years. And Apple is going to be fine in terms of cash, I'm pretty sure, for the next few decades, if that. So Amazon, I have 0.9 shares in that, and again you can see it peaked at around 4th of August and went down a little bit. Overall in the past month it is up by 7.5%. In my portfolio it is up by 45%, so that is a £31 gain. They don't pay a dividend yield, and there's almost no point in looking at their balance sheet and income statement because Amazon has plenty of cash to spare. Next is Alphabet. I have only 0.14 shares in that. Again, past month they have been doing excellently, 10% gain. In my portfolio they're up by 37%, so that's a £3.96 gain. They don't pay a dividend, and again income statement's doing great. Google, like Amazon, Apple, Microsoft, they have all invested heavily into AI, and that is one of the biggest reasons why the S&P 500 has rallied in a time where it decreased so much over the past 2 years. So going forward there is a lot to be gained in my opinion from companies such as Google and Microsoft because they're putting so much into AI. And lastly, AMD, I have 0.03 shares in that, and that is up by 36% in my portfolio. That's a 72p gain. Over the past month they have declined overall by 3.34%. Now if I go into my history you can see that my total realized profit from this account is £217. In total I have been paid £74 in dividends, and as you can see these small dividends are all from the daily dividend pie, which I'm going to quickly show you in a bit. But before that I do want to show you the share lending feature. So I have a few shares that are being lent out. For example, Aston Martin 1.3 shares, Realty Income 0.2 shares, Bank of Montreal, Prospect Capital, Bank of Nova Scotia, Royal Bank of Canada, Main Street Capital, and IAG and BMW, they're all being lent. So currently my lent value is £66.91, and my collateral through US Treasuries is £69.75. I'm currently earning an annual equivalent interest rate of 0.35%. However, that is so low of £66 that I haven't received any form of payment for that. So like I said before in my video about share lending, do not invest into a company because you feel like you will get a guaranteed interest rate. These interest rates are all based on supply and demand, and they will change quite a bit. For example, Aston Martin, by lending these shares, is giving me an interest rate of 1.52%. And if you think about it, if you have loads of shares in Aston Martin already, that is a nice way to kind of get dividends on this. So yeah, it's not too bad at all. But I will not be buying more Aston Martin just because I think I will get a guaranteed 1.52% return. In terms of interest for cash, I only have an uninvested £1.72. Currently the interest rate for that has increased, so Trading 212 pays half on whatever they earn on interest. Currently that means they're receiving around 4% on your money and they're giving you 2%, which is not too bad I guess for an investment company. But of course instant saving accounts are giving you 5% at this moment, where the Bank of England's rate is 5.25%. So all time I've received only 64p in interest, and that is because lately I've not been keeping a lot in cash. You can always, if you want, actually opt out of getting paid interest or share lending. This is because if you are an additional rate taxpayer, any money you earn on interest must be taxed later via self-assessment. So if I go into my pies, you can see that I have just one pie, which is called the almost daily dividend pie. So currently you can see the value of this pie is £364.20. If you look here, it says I have £375.92 invested, and the minimum amount recommended to be invested into this pie in particular is £400. Now at one one point I did have £400, but accidentally what happened is I withdrew £25 by mistake. I was trying to get out some of the dividends as cash and I accidentally slid too much and it was £25. That means £25 worth was sold, and the minimum investment into this pie is £50, and I couldn't be bothered putting in another £50. Anyway, overall the result is negative 3.12%, and that is a loss of £11.72. Bear in mind that the £25 that has gone out has affected the returns on this, so it might not exactly be what you see here. So overall I'm still receiving dividends even though I have £375 invested, and as you can see overall I've gained £8.85 in dividends, which is actually not too bad for a portfolio size of £400. Now if I go into the holdings, there are 50 holdings in this pie, and they are Apple, Realty Income, and a bunch of others. If you do want to check out the almost daily dividend pie, you can do that in the link in the description down below. But I'm just going to quickly flick through some of the companies. For example, McDonald's, they're doing okay. You can see that Caterpillar has been doing quite well with 23% increase, JP Morgan 13% increase, and some of these companies are actually the companies that you'll see in the share lending thing. So I didn't actually buy them individually, I actually bought them as part of this pie package, and therefore even though I have a very small amount of shares in them, they are still being lent out in the Trading 212 share lending scheme. So now let's look at my Trading 212 portfolio, and if I go to the drop down menu, you can see that I have an account value of £20,894, and currently I have absolutely no free funds. My ISA utilization is 100% for this year, so I've maxed out my ISA, and currently I am at a loss of £467, so that is a loss of 2%. And I like to keep it simple in my ISA and only hold one fund, so currently that is the FTSE 250. And as you can see over the past month, the FTSE 250 has actually gone crazy as always. Like I said, my return is negative 2%, loss of £467, and my average buy-in price was £29.81, which actually was really high in this month. In any case, I'm not going to sell this for a loss, so I'm going to be keeping it. The next ex-dividend date is around the 15th of September. So if I do hold that, I should receive around 21 to 22 pence in dividends per share. So that is going to be a few hundreds in dividends. So that'll be quite nice. And I will reinvest that back into the FTSE 250 or maybe even the S&P 500 if it has dropped a bit since then. If I go into my history, you can see I have a lot more realized profits because I have been buying and selling the FTSE 250 a lot more. As you can see, since the 6th of April, since opening this ISA, I have been buying and selling a whole bit. Like, there's literally been doing so much, and that has led me to gaining this amount of profit. So a £1,110 profit is not too bad at all within the first few months of opening this ISA. You can see from my dividends, I've received a total of £247. Again, very nice, and that was one dividend payment from the FTSE 250. The next dividend payment I don't think is going to be as high as this. Maybe it's going to be around half, around £112 maybe, but it's still nice to receive these dividends, and the fact that this is a stocks and shares ISA means that everything is tax free. So make sure to check out some of my other videos, and I will see you in the next video.